Hello, this is Brian Shannon from Alpha Trends Blogspot. Today's Thursday, the 27th of December, 2007, and the market's closed, and the market found a reason for some selling today with the troubles overseas in Pakistan. The S&P 500 was down almost $2, $1.98 or 1.3%. And you can see it's back below the declining 50-day moving average and back below the 200-day moving average as well. So we're still not out of the woods yet in this market. Yesterday I had pointed out the potential for a setup that may be developing. This is still valid, I think, that we have the potential of this inverted head and shoulders setting up. But again, there's no reason to really get aggressive until I think it clears this level here, until it creates a higher high to go along with this higher low. This is going to be the important level for this market going forward for the next couple of weeks is 144. Holding above that, then you can start to build a little bit more bullish case. But right now we're kind of stuck in the middle of that range. We've seen the market get a little bit extended with its forward 5-day rally in there. And when we look at the 10-minute time frame, you can see it did pull back to the 5-day moving average, which is still rising. And it's also holding above these two levels that we were looking at as potential support. This one here at about 147.20, and then right down there at about 147. So let's just call 147 an important level, and below that we've got about 145 as potential support, and then the 144 level, which again, if the 144 level is broken, then it could be bigger problems. But right now, overall, we still remain in a big, sideways pattern, basically, with really, I mean, the trend of 2007, you can say it was up because we had these higher highs and these higher lows, and we are up a couple percent. But it's losing steam in here, and really there's just no decisive action right now from a larger picture as far as who really has control here. So the market continues to favor. This market environment continues to favor aggressive trading in either direction. It is bullish that it holds above these levels. Now we have to look at the 148.40 or so. That's a little level of resistance that the market will have to make it above in order for the buyers to regain control. So it's looking a little more neutral here over the intermediate term. And let's take a look at the semiconductors. Again, these things are searching for a bottom, and wouldn't be surprised to see a test of that 400 level again. Not much to really say in there about that. The IWM had gotten up to this important level that's been important again for the last 6 months of the year. About the $80 level is what we're going to call it. At $79, $80, $80. Since the original breakdown on that mortgage mess, it's really had a difficult time with this $80 level. Spent a little bit of time up there, but then did reverse back down. We do still have a declining 50-day moving average in the market below the 200-day moving average as well. So overall, I think on the weekly time frame, you probably got to give the benefit of the doubt to the sellers in here. Certainly the second half of the year, we've seen the path of least resistance is lower in this market, and it isn't good to see that 200-day moving average acting as resistance. So it's coming down to a level where we could actually probably start to put some Fibonacci on here and say, where's the potential support based on this rally here. And you can see right about the 50% level at about 76.5 looks like a potential likely target that would fill this gap as well and satisfy people who look for gaps to get filled. But again, it's just overall really just, like I said yesterday, what you have to do is you have to give the benefit of the doubt to the buyers when we have a rising 5-day moving average, but you want to look at the definition of trend. The definition of trend has been higher. We've seen these higher highs and these higher lows. Well, that definition was broken here early this morning, and when that happens, even with a rising 5-day moving average, it tells you to become a lot more defensive on your shorter term trades and to start locking in gains and not get so aggressive on the long side, and perhaps even look at some of the weaker stocks and look for opportunities to sell those short. But right now this market's going to have to stabilize a little bit before we can get confident really in either direction. So the IWM, it is back to this level here that had been important, is about $77 a share. This has been an important level as well. So it's kind of stuck between the 77 to 78, And we do see this higher low, but again, the big danger down here near 73. Going forward for basically it's going to be important next year. And then the $80 level. If it can get back above $80, then I think you're going to see a lot of shorts start to get squeezed, but the proof just isn't there yet. The breakouts usually don't come from such an extended move, and that's why, like I said yesterday, it's at this level that has been important as far as support and resistance in the past, but it doesn't mean to sell short up there. It means get much more defensive, look to lock in those gains, and then the market told you to do that this morning. So you look at the longer term time frames to get an idea of what could potentially be happening, and then you drill down into the shorter term time frames for your timing decisions. And clearly, the market was in a downward trend pretty much all day as it was maintained below this declining daily VWAP in here. So the NASDAQ 100 lost about 1% or 57 cents, and this market continues to show the most resilience, holding up the strongest here, just below that resistance that's been so important here at about 52.5. So it's holding also above the 50-day moving average, which is starting to flatten out. So we've got more neutrality basically in this market until for some time. It looks, looking at a weekly time frame, we've got a lower high, but the market has found support in near that 200-day moving average. The only thing that's really going to do major damage to this market would be for a break back below that 48, and that's too far away to really consider important right now. If we were to see a return back to the middle of this range that we've seen develop in here recently, we could take a look at we'd probably see it down near about $51 a share. So this market continues to send a lot of mixed signals across different time frames, and basically it means that we're seeing these rallies and these declines, and when they're there, you got to take advantage of them and realize that they come within an overall more neutral environment, so it favors short-term trading as opposed to creating positions that you can likely hold for longer periods of time.